Morning. Okay, we have a quorum. You agree, Lisa?
Yes.
Okay, call the meeting to order. Is any, John Lee is not here. Is there anyone here that would like to chair this meeting? Let's speak up all at once.
Whoops. What, how do I get-
Jim, do you want to chair the meeting?
I'm happy to do it. Let me call the meeting to order. First item on the agenda are the minutes from March 22nd. They've been circulated. I hope you had a chance to read them. If there are no questions, I take a motion to approve them.
Motion.
Thanks, Tish. And a second?
I'll second it.
Okay, thanks. Those in favor of the motion, say aye. Opposed, no. The motion, it passes. Item 2, Mike, you want to do these together? Now, let's do them separately. The Form 990, which you have circulated. I guess my only question there is, this looks very much like last year's and the year before, right? It's simply an update. Those of us who've read it over the years can see the similarities. Isn't that right?
That's correct. And in addition, the accountants now are able to create this without retyping anything. They just push the button from the tax return and it automatically fills the report. I do think that, for instance, on page 2 of the 990, they do update things such as during the year, $580,000 was lent to various local businesses, offset by $392,000 in loan repayments. So there are certain things in the report that have changed because the information and specifics related to those reporting obligations are different from this year than 2021 than they were in previous years. But none of the yeses and nos have changed. And I think none of your salaries have changed.
There was some talk of doubling them. I don't know whether we considered that.
Well, no, what we were going to double was the time commitment, but
Actually, they doubled my salary.
So yes, in essence, it's a report that is simply an aggregation of information in a different format than the auditors have prepared in the financial statements.
So unless there are questions, I would, this committee is, according to the 990, we are supposed to review and approve the 990. So we've now reviewed it and I would accept a motion to approve the 990.
I'll make that motion.
Okay, Dave, second, please.
Second.
Okay, we have a second. Those in favor of approving the 990, say aye.
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 Opposed, no. Okay, we've approved the 990. The charitable 500, any remarks on that? I mean, we're talking about the same data.
Right. And basically, the New York State char report is just again, it's the Form 990 and the New York State form. The New York State form, I think, is a little less inclusive, but I think you basically attach the 990 to it. You can see on the char form, they're just asking us what type of government grants we had received. And we received 408,000 from Columbia County. I would have put those, if I was the auditor, in 2 lines. One was for our 391,000 for our funding, and the balance was for the broadband grants. But they aggregated our SBA money as well. So you can see that, and with the SBA money, it wasn't reported as income. They loaned it to us. So, but it was government funding that it had to be reported that way. The thing that makes, I wouldn't want people to assume that we had $681,000 of our $880,000 of income from government funding, because the SBA money is a loan that we relend to others, but it did come from the government. When I got here, we were 75% government funded from the county, and now we're about 50%, which is the commitment we had made to the Board of Supervisors when they restored our funding, that we would work towards that percentage of support rather than relying on them at a higher percentage.
But that change in percentages due to our growth, not due to
Yes.
their reduction of.
Yeah, they've kept, and it was a result of growth. We went back to the membership program that wasn't in place back then. And because of the expansion of the loan program and the expansion of the amount of interest that we earned on that program, we've been able to get back.
I think, Mike, that's a good point for Joe and other new members of the board, that at one point we were totally reliant on the county. And one of your early proposals was to see if we couldn't find other sources of revenue. And we've done that with some success. Maybe a little bit less so these days on membership issues, but the general concept, I think, that you proposed has been working.
Interestingly, we're back. We're back to where we were last year. We don't for April because of the sponsor. Many organizations now can do sponsorships. They can't do memberships. They need to have some marketing result from the expense, but. We are at the end of with the annual meeting, we will be where we ended up last year. So we think that we may not get to the $60,000 budgeted, which is the highest we would have been in the last 6 years. We think we can get closer. People are starting to come out of this with the recession. It may affect it, but I'm pleased with where we are, realizing that with COVID, we were at 32,000 for the last 2 years.
Okay. Then on the Char 500, looking for a motion to approve it, please.
I'll make that motion.
Okay, thanks, Tish. A second, please. I know you're trying to do it, Joe.
I'll second that.
Those in favor say aye.
Aye.
Opposed, no. Okay, the Char 500 is approved. Treasurer's report, which, Mike, I guess we received early yesterday evening.
Yes.
You want to talk about the presentation? Sort of looks there's some conceptual changes as well as some details you want to review.
Yes, as you can see, the format is different. We have gone to QuickBooks Online. Kathy Leiden and I have discussed the fact that this is way too much information. This is the full line item. It is what we normally provide this committee, but in preparation for the board meeting, apparently we have to go in and check boxes as to how it will be consolidated or compressed. And we're going to work on that between now and our next meeting. I think when you look at the balance sheet, we're up $216,000, but you'll recall that we have received, we drew down $200,000 since last year or more in the loan fund. And so it's really just moving things from one box to the other, with the exception of the increased SBA funding. And if you go back to the CHAR report, we had $273,000 in new SBA money.
Right.
So we go ahead.
Mike, the HDC repayment would be reflected next month's report, correct?
No. That's in here, but that wouldn't be that wouldn't change our net asset or liability, because It just moves it from one
It's a
box to
different-
the other.
Correct.
You look on the front page in the second, after the third line, you can see where CEDC loan cash account is up 159,000. That is the 200 back in, and Martha made some loans out. So, you know, that's where the 200 from the Hudson Development Corporation came in. So, on the P&L, basically, we have $15,000 more from the county because we hadn't budgeted for the broadband study.
Mike, excuse me, you're talking about the budget and actuals right now, not the P and L. Okay,
Yes, well, yes, the budget versus actual P&L, but the other areas, we are, as you can see, we basically took the $60,000 for membership and divided it by 12. So, you know, we do look like we're ahead. We have gotten in the last 2 weeks some significant funding for the annual meeting. It kills me to look at this bank interest when we used to make 10 grand a year in bank interest when we had everybody giving us 3%. And then we did pay out the Hudson River Bank and Trust Maston Park grant. That was, we reported that as income last year, and the expense was paid out this year. So, you know, it does net out of revenue because it came in as a grant and was a carryover asset account that got debited rather than an expense. You can see that when we get down to the total income, we're up $13,000, which is basically the broadband grant.
Mike,
On the expense,
Mike, can I interrupt you for 1 second? Going back to that HRBT Maston Park, I don't, could you refresh your recollection? What is that? I couldn't help but note the negative, yeah.
yeah, well, I don't know. I wanted to check with the accountants because I probably would have asked them, should that have been expense rather than netted out against the grant? And after our last experience with them on our grant funding, we're going to put them to the test on that. But the Hudson River Bank and Trust made a $15,000 grant to support the town of Stockport's reconstruction or rehabilitation of their Maston Park. The town could not accept those funds due to regulatory issues, I guess. And just as we did in Germantown, when they upgraded a park, the foundation made the grant to us, and then we paid, we reimbursed the town for the expenses that they incurred related to improving the park. And we have, you know, a file of receipts that exceeds $15,000. It's a fiscal agency relationship that we've done. You know, and it has to do with the inability of a town or a foundation to give a grant to a town. And we serve that purpose at the request of individual town supervisors.
And that's essentially a pass-through, however we account for it. Okay.
Right. Yeah, and we don't take any fees for it. No. We just remind them of it. I won't say that because we're being recorded. So now, if we go into the expenses, you know, I'm pleased with where we are on expenses until we get down to the we are $25,000 to the good on payroll, but that's really to the bad because we're all just swamped. And we have put out ads. We have had a couple of candidates, and we made one offer for the administrative assistant's per job, and They emailed us the morning they were supposed to come that they had other family issues. So Lisa and I are continuing to work on that. Where we appear to be over is on the new initiatives. As you can see on the top of that page, we have $15,000 in a general category. That really needs to go into workforce and education. It was the $15,000 that we contributed to Columbia Green Community College for the Junior Leadership Career Connects program. So that would go under workforce. The broadband study is here. If you think about it, we didn't budget for the broadband study, so the money coming in, which matches this, basically would bring us down to 16,000, which would put us much closer to our budgeted number than what this shows. Our other area of concern is the office expense, and what we did is we need to go back and we could adjust the $3,500 against the $19,000 in dues and subscriptions. Really doesn't really tell the whole story, because if we had put all of the dues and subscription budget in the first 3 months of the year, we would be on budget. So that's really a function of the fact that we took the amount for dues and subscriptions to the various organizations that we're members of, divided by 12, instead of.
They all came due early.
They all came due in the beginning of the year. Now, just to give you a quick recap, our biggest expense to date is $5,000 to the chamber, $1,500 to the New York State Economic Development Council, $1,500 to the Center for Economic Growth, $750 to the Upstate Venture Capital Group, $750 to the International Economic Development Organization, $99 to the New York Farm Bureau, $125 to the Upstate Rural Housing Coalition, $1,000 to Hudson Business Alliance. So, we can break it out for you, but we still have the Pattern for Progress membership to pay this year, and we do believe that these memberships are valuable in the overall scheme of things, but it is $20,000 a year when you're all done. Now, we get back on budget with our miscellaneous expense. We're under budget on professional fees, but obviously we're accruing for accounting, and we will have audit fees this month. And I think we are waiting for a March bill from Andy. On public relations and marketing, we're under budget. So our total expenses are under budget by $10,000. I'm just concerned about those two categories, that A, either we budgeted right, or B, that we don't overspend, because we just absorbed the $25,000 that we saved in payroll, and I don't want to be there. So we are monitoring that carefully.
Mike, on the broadband study, you said we did not budget for that. Is there no revenue? Is there no revenue feature on the other side?
There is. We didn't budget for the revenue either. So if you go back, basically, at the time we did the budget in the fall, we didn't know we were going to get $30,000 for a phase 2. So if you go back to the income and look all the way at the bottom.
Where are we with the phase 2? We paid 10 out,
Yeah, broadband, we paid 20, 10 last year and 10 this year.
so we have 10 to go.
Yeah. So again, I just want to be sure that we watch those categories. We are going to have to get probably 3 new computers. Mine crashed the other day. Fortunately, it was just the power feature, not the hard drive. But, and we have budgeted for that in the SBA grant. So, I just want to watch the office, overall office expense, which includes the website and the other areas, and also the new initiatives.
Mike, is this breakdown by class? Is that so? I don't remember seeing this.
We used to have it, and it was in Excel, so it didn't look as detailed. Basically, what I was concerned, and the reason I decided we needed to do it in the first place several years ago, was we were showing a profit. But we were showing a profit because we were putting all of the interest income from the loan program into the loan funds, not pulling it out for operating revenue. And so, if we take a look at that on the bottom of the second page, you see we have $220,000. It's about halfway down the page where it says total income, gross profit, 224.03.
Okay.
The second page, the second page of that class report. And we're showing $200,000 in operating. So when you get to the bottom and you see that we've lost $10,000 in operating, on a cash flow basis, we've lost 10,000 because the 10,000 or the 20,000 that we earn in interest didn't go into support or to subsidize any of the operations. It all went into back into the loan funds. Now, we have had that discussion over time. We've been able to roll cash flow in a way that it hasn't really impacted us, and it has resulted to some degree in reducing our cash flow, our cash balances over time. But I do think I wanted to be able to see, were we breaking even on operations, or were we breaking even because we were earning interest on loans, but we didn't put that money towards operations?
What's the dollar now?
20, well, it's $60,000 a year.
60 grand.
Yeah. Right? Last year was 60 grand in interest.
Okay.
So, again, it's the first quarter. I think, I did, when I looked at it on a profit and loss basis, over the last 8 years, if we take our net income and divide by 8, we would get an average of $16,000 a year to the good. So we operate. Last year we were at 35,000. The year before we lost 27,000. Year before that we made 595,000. So we've been trying to keep things where, as a not-for-profit, we use everything we have to serve the mission of the organization. And over an 8-year period, our average net income was, as I said, $16,000. So again, we try to watch this. And the other interesting statistic there is that our over 8 years, the average total asset number is 3.457, and right now we're at 3.75. So again, when you look at this, there's a lot of noise from month to month and year to year. And absent putting money into the reserve fund, which is an expense and affects net income, or receiving the land sale money for the DNJ property, which creates one-offs in both cases. Been pretty stable financially.
Okay, if there are no further explanations or questions, motion to approve the treasurer's report, please.
I'll make the motion.
Thanks, Tish. A second, please.
Second.
Second,
Okay, those in favor, aye.
aye.
Aye. Opposed, no. Okay, the treasurer's report's approved, and I guess the next item, investment policy, Mike.
Included in your, do we have it in the packet? Yeah, included in your packet. I'm sorry, I was looking at the financial.
That's all the way.
Is the investment policy. This is not changed, but we do update it annually, if not less often.
Yeah, I think,
So
Mike, we have actually,
2019, we did it on my birthday in 2019, and we're updating it 2000, and we did it in 2021. Now we're doing it in 2022.
I think we've actually approved this at both the committee and the plenary level. We can approve it again. Just 1 point from me. Remember, we raised the issue at both the committee level and the board level about the misalignment between earnings and fees. You know, remember that? We had that discussion at both the plenary and our last audit and finance committee. And I just want to point out, Mike, Article 7 of the policy, no, Article 8, collateralizing our deposits. That's a slightly different issue perhaps, but I think.
We're working on that.
Okay.
We
I mean,
actually,
we
we
are,
actually, we have a new person at KeyBank, a new cash management person, and they are going to do that. And we just have to give them the accounts that we want included. And, you know, we're not going to include some of the smaller accounts because it's $250. It's not $250,000 of insurance per account. It's per customer. So, you know, when we have all these tranches for the loan fund, we can't look and see we have $59,000 in there and say, oh, that's fine. So we do have to give them the list of the accounts, and they claim they have an ability to do that through their corporate cash management system.
right, I don't want to keep repeating it, but it dawned on me when I looked at that, Article 8, that we were effectively out of compliance with our own policy. So it's probably wise just to get back into compliance. And it looks to me as if you're moving that way.
And it may be that we have to take some money out of the banks that won't do it. You know, we're having trouble with, we had trouble with Kinderhook and with Bank of Green County doing it. But again, if auditors are making issues of this, it might be that they're now getting more aware that it's something they need to do to keep accounts.
Okay, all right. Well then, although I thought we had approved it, but let's reapprove it anyway. Motion to approve CDC's investment policy. Motion from Dave, a second, please.
Tish Finnegan, second.
Okay, all those in favor, aye. Aye. Opposed, no. The motion is approved. The investment policy is confirmed. Public comments? Any other points? Any other?
I want to bring something that we can't discuss because I didn't post it, but I want to give you some information.
Okay.
We would, as you know, Columbia County has been looking at purchasing a parcel of land at the Commerce Park. We're joining the Commerce Park. It's 6 acres owned by the Sesterino family. It's at $224,000. We did discuss this, I believe, at the last board meeting.
We did.
We're moving forward with that. And I did decide that we couldn't go forward. Andy and I discussed this. We couldn't go forward without getting a phase 1 environmental study. We just don't want to be in a situation at the end of the day that we're holding a piece of land that, as well as a title search. So we expect to close by the end of the month, but just to update you on that.
Oh, in contract?
We're waiting for their lawyer to send Andy a contract. So, and the county is very pleased with the role we're playing, both the leadership and the minority and majority caucuses.
So Mike, you introduced this, I think, in executive session, right? So this is the first time we're
That's
hearing it in public session. And could you remind us about how we're going to pay for this?
Yes. Several years ago, in connection with the sale of property within the Commerce Park proper, the county instructed us to hold the proceeds of those sales for future direction. So if you look at our balance sheet, the auditors have $120,000+ that we're holding as a restricted county funds. In addition, you'll recall we borrowed $100,000 under the EIDL loan program with the SBA. And the IDA is in the process of selling a parcel of land for the county at $90,000. And that money will come to us after the sale. And then but in the meantime, we're going to use the $100,000 that we borrowed from the SBA through the EIDL program. Once we get the $90,000, we'll pay that back. Then it's more likely than not that we'll sell this back to the county. And they will pick up any deficit between the funds we have on hand, which is going to be, well, we have 90 and 120. So we're going to be about $20,000 short, plus the $3,000 for the environmental study and any other ancillary. So we will recoup what we have. The only difference will be at the end of the day, we won't have $120,000 that they haven't allocated what to do with, that we might have come up with a great idea to convince them to let us use it for.
So Mike, and I assume there's no problem using the EIDL money as an advance against that property sale.
No, those funds can be used for any purpose. And I think that in addition, when we look at our available operating cash, we have, in the interim, we'll have more than 1 year of county funding on hand, which has been always the goal. That if the county, for whatever reason, suspended funding again, we would at least have 1 year of ability to renegotiate with them.
Mike, do you need any committee or board authorization to pursue the purchase?
No, I think because of the new rule that if we don't have it posted, that we were going to discuss it and any material related to it 24 hours in advance. I just wanted to give it to you for information.
So we might need a resolution at the board meeting next week.
Yes.
Okay.
And that's one of the things that we haven't discussed, but we raised it, or Lisa raised it. You would be, when do the 990s don't go in until September, right? Legally, I mean, we don't have to have a board meeting.
No, we don't have to.
Yeah.
We've looked at them.
Yeah.
And approved them. I think maybe you want to have them into the next full board meeting,
Yeah.
but I don't think you need to necessarily have one.
Martha doesn't have any loans. The county funding for our ARPA program with the chamber is also going to be delayed and reviewed next month by the Board of Supervisors, not in April as we had thought, and on Wednesday. And so we're thinking that with the annual meeting, we would rather have the board members take the time to come there than to. So I think we're gonna make the decision today to cancel next week's board
Oh.
meeting.
Oh, that's okay.
And in the past, I understand they used to have a board meeting after the annual meeting, which was really,
Those are
awkward.
rough. We're standing in the room.
And So I do think that
Just skip it.
we'll skip it and we'll get that out today and just encourage all the board members to use that time to come to the annual meeting.
Good decision.
But Mike, if you do need, again, if you needed an authorization for the land acquisition or something like that, unless we do it at the annual meeting, you won't have the authorization you need.
Well, I think that we could either hold a special virtual meeting or we could wait till the May meeting, because I think that owners wanted to be sure that there was someone under contract to buy it because it had been a handshake up till then. And I think that, you know, I spoke with his attorney and his real estate broker, and they seem pleased with where we are in the process. And I know Andy's following up with them.
Can I say one thing about the approval of the 990? By its own text, and we can change this if we want, the approval of the 990, I think, resides with this committee. I don't know that you actually need a plenary board approval. Doesn't matter to me, we can do it anyway, but I'm not sure that you need it before you file it. If you look at the text of the 990, so I don't have it, the spot in front of me.
Well, I think that's, that would be great, because I just looked it up, it's due May 15th.
Yeah, it is.
Okay. All right. Any, well, thanks for alerting us. We can change our schedules for next week. And
Yes, we
wait, Mike. Okay, anything else? If not, a motion to adjourn.
Motion.
Okay, thanks, Tisha. I just say those in favor, aye, we are adjourned. See everybody, I guess, at the luncheon, at the breakfast.
Okay.
See you there.
Take care, everybody.
Bye now, take care.
Thank you.
Bye now.
See you later, Dave, Mike.
See ya.
Bye, thank you. Feel better.
See you, Joe. Yeah, feel better.
Thank you.
Yeah, there's a nasty cold going around. I had it several weeks ago for a few days.
Yeah,
I'm still, it gets in my chest. I'm still coughing a little bit, but I feel fine.
it just got a
And
message
but my
there.
wife got it from me.
Did she?
Oh my God, she's going with it.
Yeah, Erin got it. She said she was out for a week. She
Yeah.
said she was just down.
It's just a
for
cold.
Just a cold. She said
Nasty.
she felt like crap. Oh, I suppose I should stop that meeting.
All right, we're good. We're gonna cancel that meeting then, huh? I think that's a good idea.
Yeah.
I'm not trying to get people together.